Good evening. This is Tom Alexander. It is Saturday, November 12th. It is about 6:24 p.m. Eastern Time on Saturday in beautiful Charleston, South Carolina. This is the video addendum to the weekly report that presumably all of you have received. If you did not receive, if you're finding this through YouTube and you did not receive the written report, you can receive those. They are free by just simply sending me an email, tom@alexandertrading.com. I'll put you on the list, and I'll also send you this week's letter. Also, if you do me a huge favor, please subscribe. Please like the video if you find value in the material. Okay, we have had a historic week in the stock market. We had a historic day on Thursday to the upside. And I want to start with the Dow this week. The Dow was up almost 18% in 30 days. That's a pretty historic move. There have been other moves of similar magnitude over my trading career of 38 years, but not a lot of them. It's not only the amount of the increase, the 18%, but it's occurred in a calendar month. Now, just for fun, and incidentally, we are only, or the Dow is only 8.5% from an all-time high. Now, let's just say for fun, if we were to rally over the next month, the calendar month, a similar amount. So if we were to rally into December 12th from where we are now, and that would be the same rate of change off this low, which I think is extremely unlikely, but just for fun, 18% from the print high, that would put the Dow right at about 6,000 and change. So just to give you an idea of the magnitude of the rally in the Dow and the rate of change off of this low. Now we could very well trade to a new high before the end of the year. That itself would be a pretty incredible move, but I don't think you're going to see this rate of change continue. I just look at this stuff. This is just sort of an interesting view, and it gives some perspective on the incredible momentum in this rally, the incredible move off of this low. So let's go through and look at each of the others, because we continue to have this disparate activity among the primary U.S. trading indices. Now, the SPX has rallied about 14.8% off the low, which is quite an extraordinary rally. It would be helpful if I shared the screen, so I'm going to do that. And I'm actually going to go back to the Dow so you can see what the hell I'm talking about. How about that? Here we go. So here is the rally, the 18% rally off of the low. And then to show you 18% in the same amount of time, which is here. This would be a calendar month. This was a calendar month. So if we were to rally 18% over the next 30 days, you're looking at about between 6,000 and 6,100. Now, I don't think that's very likely. I don't think it's out of the question that we rally to a new high sooner rather than later, but I don't think you're going to see this rate of change continue. As a matter of fact, it's a pretty solid bet you will not. Okay, let's look at the other indices. We go to the SPX, and we're up about 14.8%. Now, to show, we're 8.5% from a new all-time high in the Dow. If we were to rally 8.5% in the other indices as well, I've marked those on the charts. These charts are in the report, by the way. So a rally of 8.5% from the top tick on Friday would put us in the neighborhood of that August high. Okay, so that's the S. Oh, and to the downside, let me cover that first because I'll go back to the Dow. What we should see now, ideally, is continued upside and under a bullish scenario with relatively shallow retracements. This is the area to keep an eye on in the Dow, okay, to the downside. If we trade very much into Thursday's range, say below Friday's, into this gap, then you're starting to bring into the picture other scenarios. And so I have marked these key reference areas in each of the indices, and it's, again, they're in the report. This is the downside level that ideally will hold under a bullish assumption. If we were to continue to rally, the Dow goes to a new high and everything else rallies along with it, same amount, 8.5%. And the S&P, that would be back to the August, just above the August high, would be 43.40, 43.46. NDX. Now, this is interesting. The NDX has rallied a little over 13.5%. 8% from here would put it just above the September peak, rally peak, minor rally peak, but well below the August high. And the Russell is up just shy of 16%, a rally, an additional rally of 8.5%. Again, why 8.5%? Because the 8.5%, assuming everything, all four rally the same amount, which again is not particularly likely either. But if they were, an 8.5% rally in the Russell would put it at about 2062. The August high was 2030, so in that neighborhood. Okay. Let's take a look at the technicals. All right, looking at our breadth work, the red oscillator down here is basically a moving average. It's a 10-day moving average of NYSE advancing issues. Green is a 5-day, and the blue histogram is breadth, NYSE closing breadth. So we had the strongest up breadth day that we've had since the March 2020 lows on Thursday. We had positive breadth on Friday and higher highs. That's a divergence. That would normally be a concern, but you really didn't expect to see the momentum that we saw on Thursday continue into Friday. You did see higher prices. Now, I will make note, you have this divergence in the 10-day moving average and the 5-day moving average. I'm not overly concerned about that at this point, but what we should see continued upside momentum and breadth. Breadth should continue to be strong. The closing breadth readings from here should be relatively moderate, something like we have in strong rallies like we had back in here. This was the rally in the August peak. So if we have negative days, we have negative breadth, closing breadth, it should be fairly well contained and it should not be extreme. Really, we should not see a negative 2,000 down, a closing breadth reading until this rally phase is over. And we should see the 10-day moving average, a 5-day moving average turn up almost immediately, and then sooner rather than later reach this upper extreme. And we will continue to monitor this on a day-to-day basis for subscribers and weekly in these free reports. Okay, another view, and this is really interesting to me, should be to you too. VIX. Every time VIX has, since the high and at the high, every time VIX has traded above 20 and then back down to or below 20, we have marked a very significant top. And that has occurred 1, 2, 3 times. Now, VIX is not there yet. It actually closed on Friday at 25. So there's room to the downside, and it can stay down here for a few days. It is not just a one-day trigger. If you notice, it might take a few days to see if indeed we do drop below 20. We want to take a look at where we are price-wise. We want to take a look at the other internal work, such as breadth. We want to take a look at market structure. But if VIX drops to 20, then that's a heads up to start looking for maybe that next, at least, short-term high. Another chart I want to bring in here. This is a chart of the 2007 market top and the subsequent bear market that completed in March of 2009. And this it's uncanny how at the 2007 top, again, you had that VIX below 20, the market declined, and then it rallied, VIX reached below 20, coincided with a top, a high, considerably lower lows, rally, drop to below 20, rally top, drop, rally, drop, and then you had the explosion in breadth. Now, I've seen a lot of in the decline off of the January high this year. People seem to be thinking, okay, when are we going to get the big spike? Well, we didn't really get the big spike in VIX until relatively late. It was almost a year. How about that? Okay. It was almost a year before you got the big spike in VIX in the 2007, 2009 bear market. So this is giving us something to keep an eye on as we continue to trade here, and we'll see if the rally continues next week, continues into December, and we'll see how VIX behaves. So it could get really, really interesting. Okay, some other stuff that we're looking at. Let me, I'll show the profile view real quickly. I put the profile view in here every week, and I want to emphasize, people find me through market profile a lot of times, and I tell people all the time, you don't want to be a market profile trader. A market profile graph is a way of organizing data. It gives a perspective of market behavior, and it can give a very powerful perspective, but there's no magic in a market profile graph. There's no magic in a bar chart, a candlestick chart, or any other chart. A chart reflects past activity. Charts follow the market. Markets don't follow the chart. So don't try to turn market profile into something it's not. It is a great tool to visualize market activity and market condition, nothing more, nothing less. Currently, we appear to be in a distribution. That's a market profile term and an auction market term. That distribution, assuming we're in a distribution, began at Thursday's low. So the question is, how are we going to develop from here? Are we going to continue to develop higher, or was that the top of a distribution range, and now we're going to fill in between somewhere close to Friday's low and Friday's high and Thursday's low? Or are we going to have a minor pullback and then we trade considerably higher into maybe the September high before we get substantial balance? Balance will occur. You can go back and look at profiles. That's one view. That's one takeaway from any profile view of the market. You do get these volume nodes in all trends, and that's true in all degrees of time, all the time. But I put this little schematic in the report every week, and if you go back and you look at previous reports, it's uncannily accurate. Okay, what else here? Let's take a look at the US dollar. Okay, I talked about the US dollar last week, suggesting this wide range down day could be portending a top of significance in place. I think that has been confirmed in a big way. There is nothing between this present level and about 104. Now, this has been the 2-day move here is pretty epic. I would not be surprised to see some sort of balance, but I would continue to favor shorts in the dollar. Notes. Notes and bonds, 30-year bonds, broke a very significant downtrend line. This was effectively a crash. And like everything else on Thursday, we had a huge rally. Now, what is important in notes and bonds are Thursday's lows. I would favor longs against Thursday's lows. We could get some backing and filling in here because this was, again, it was an historic up day. Okay, let's take a look at gold. Gold broke an uncanny series of lower lows and lower highs in the daily chart coming off of this triple bottom. And I've talked about this triple bottom for the past 2 or 3 weeks. I would be favoring longs in gold now. And then crude. Crude appears to be trying to generate upside momentum. It is making a series of higher highs and higher lows. So I would be favoring longs in crude. Guys, have a wonderful weekend, and I will speak with you again very soon.